All right, finally. I guess I'm not going to have to introduce myself again. All right. We're recording in progress. My name is Dio Jegede. Sorry, I missed that part. All right. We have Kess Atuyota with us today. While I will not go into history of how we met, Victoria Makinde, good to meet you, located in Dallas. I'm in Dallas too. So maybe we can connect after this. Good to meet you, Victoria. Thanks for joining us today. Um, Kess is going to be taking us through his real estate journey. Today is an interactive section. Today is more of a Q&A. Feel free to ask any questions as we get along. I can see Kess is writing notes already. That guy is a program manager to the core. He's taking notes. I can see that. We have Movila events. Oh, let me do a free advert. If you have at my 40th birthday, Movila event was there. She was the one that did all the planning and everything, along with my wife and my cousin and my brother. But Movila events, you can grab her phone number from that chat. She's really great. Clara in Lithuania. Wow, I used to live in Lithuania. Clara, good to have you. Thank you. Dolapo Alabi. Dolapo, thanks for joining. That is my colleague all the way from Unity Oye. Ngozi, how you doing, my professor? Good to have you. And everybody else. I think I know a few people. Yvonne, thanks for joining. Kemi, always good to see you. Femi, Robert, thank you so much. All right, going back to Kess. Kess has 2 years experience in real estate with focus on duplex and commercial property. I think we actually started our real estate journey around the same time, and we've been, bouncing ideas off each other, which gives us that good synergy to be able to work together. When Kess sees something, he reached out to me. When I see something, I tell him about my own deal. We tend to bounce ideas off one another, and I like the fact that he's not just a friend, is also someone that we're in the same business line. So that is something that I like about Kess. And that is why we have him here today. So before I, give Kess the floor, like I said earlier, if you want to grab Kess contact, that's his phone number, his email address. You can connect with him on LinkedIn and also on Facebook. I will definitely share this as we get along. Again, I'm going to stop sharing at some point so that we can see Kess' face very well. But Kess, Yvonne, good to see you from Minneapolis. Thanks for joining. Good to see you again. So, Kess, before I introduce you or before I give you the stage, aside living in Seattle together, coming from Nigeria, funny enough, we both have 3 kids, your family and my family. What else do you think we have in common? Okay, what else do you think?
Both in the tech industry.
What do you think you, me, and my wife have in common? Aside those other ones I've mentioned, Seattle, 3 kids, tech industry. We have something else in common. I found out while I was making this slide. It was a fun fact, but I didn't want to put it out there.
Please let me know, because I will just keep scratching my head.
All right.
Or tell me the area. Give me a clean.
It's in your program management area.
Oh, okay, all right. All 3 of us are program managers, right?
No. So
we're all PMP certified.
We are all correct. Awesome.
All right.
So Kess is a PMP, that's a project management professional. I'm sure Kess had his own a long time ago. He's been doing this for a long time. I had my PMP, I think 2013. My wife had a PMP in 2016, I think. So I found out while I was doing this slide, and I was like, oh, we are both PMP. I saw that on our LinkedIn page that everybody had a PMP right in front of their name. All right.
Yeah, I had mine in 2006. June 12th, to be very specific.
June 12th, when some of us were just trying to graduate university. All right. So without further ado, everybody, you've met Kess already. Let me introduce Kess to you. Kess is a very good friend of mine. Kess, welcome to Blooming Edge webinar. We are so honored to have you. Thank you so much for honoring the invite. Tell us a little bit about yourself as a part of your introduction.
How many minutes do I have? Because I can go long form or short form.
go short form so that people can see your face.
All right, good stuff. So I'm happy to be here. Thanks for everyone who has taken time to join. I'll just give a bit background about myself. I was born in the southern part of Nigeria, then Midwest. I grew up in different places. So I would say I was born in Benin, moved up to Kaduna, then, came back to Lagos, and I had my secondary school there. I was in King's College. finished and went to Ife, read engineering, then
Great
started
Ife.
work. Yeah, great Ife.
My cousin is in from Ife, so I'm shouting on behalf of Kemi Alonge. Great Ife.
So I finished from Ife, which was in a very good way, very, very dense. And we learned a lot. It was almost like a kind of IT hub. So we learned a lot of things. And I would say we're fortunate that by the time I left school, that's when things were kicking off with, some of the policies Obasanjo was making then. So that sort of gave us opportunities. I worked in MTN. And after 3 years, took a pause. I just basically asked myself, towards the end of 2005, I asked myself, okay, look, Kess, what are the things that you can do to make yourself, advance? And prior to then, I think I'd always believed in growth in terms of expanding yourself, expanding possibilities. And two things, I never like feeling sorry for myself. I don't want others to feel sorry for me. So I believe that most of the factors for success, they are within your grasp. So the end of 2005, something just came to my mind that, look, Kess, you can actually, I looked at the entire Nigeria and I found out that, look, apart from the Atlantic Ocean, every other country that surrounds us, they're all French speaking. So I told myself, look, if I understand French, probably that will help. I learned French and started learning French 2006.
Bonjour.
Yeah. Comment tu vas?
Sonia is here. Sonia is from Ivory Coast, so she can back
All
me
right. You understand what I said? J'ai vécu en Côte d'Ivoire pendant 2 ans. So I stayed in Côte d'Ivoire for 2 years.
We are not doing this webinar in French. It's English.
Don't worry, I'm just talking to her directly, so she understands what I said. I lived in Côte d'Ivoire for 2 years.
Awesome.
So anyhow, that gave me opportunities. I was able to live. I was able to, work in multiple francophone countries within the tech space, telecoms, IT telecoms, and all that. And then I did very well. I did quite well in the company that I was in. I was in Ericsson then, and long and short of it, they moved me over to the United States, and it's been a good journey, not without its challenges, but I've been able to do very interesting projects and programs and worked in very good companies. I mean, I've done programs for Alaska Airlines. I was in AWS, Amazon. Now I'm in one of the bigger names.
Let's leave it at that. All right, that is
one
good.
of the bigger names. But I will tell you that I'll say this is a fun fact. I've actually gotten offers or worked for Amazon, Microsoft, Google, and Facebook. I'll leave it at that. So
also,
that's one interesting fun fact.
You're running with a big text.
So one interesting fun fact. So and in terms of what I do on a personal level, I believe in 3 things. One of my managers told me then, my first manager in MTN told me, he said, there are 3 things I keep very important to myself in this order: my faith, my family, and my finances. The remaining, I cannot order the priority as necessary. And that's my own personal philosophy. You must have a sense of who you are, what your purpose and value is in this world. And then your family should come next. You don't work with your family. Awesome. And then you should make sure that nobody screws around with your cash, right? Not the IRS or any other person.
I guess that is why we are talking about this today. I know your faith, I know your family, so we are talking finance today.
And then the rest of it is in terms of personal, what I like doing, I like running. Last year I ran 2 half marathons, 115K. I think I ran about 960 miles in total in terms of from January to December. I am doing less this year, but I'm going to run a half marathon probably about exactly a month from now. So that's one of the things. I wake up every morning, most times before 6 o'clock, and I put in maybe 4 or 5 miles. If I have more energy, I do 6, 7. That's something about me. Yeah,
you're making some of us feel like we're not hitting our yearly goals. I need to go and review my goals now. Oh my God.
So I would say, and then I've learned one of the things I learned from that, using Audibles. I didn't used to use Audibles, but I think I got it from him. And I've been using Audibles. And so far, it's been very interesting. I probably did about 30 books last year. And one of the things I do when I'm running, I just listen to stuff and then listen to so many podcasts. And the truth of the matter is the most important thing we have, one of the most important things we have is, what's in between these two, our temple, in between our ears or in between our temple, which is our minds. So I would say so far so good. And then do you want me to dive into that?
No, let's bring it home. Let's bring it home. Thank you so much. I think that's a very good introduction, and people have gotten to know you. Yeah, I have a lot of people. I can see Clara is great. Kemi Alonge is great. Joe Aileso, that's my uncle. Everybody is great. So you have a lot of Ife in the house. Some of us we didn't pass jam, so Ife did not greet us. So yeah, Adesoji Bello. Kess runs a lot. I know him for that. We've done few running together before in our Seattle days. So this is good. This is good. Please, if you have any questions for Kess, put it in the chat. I will make sure I ask all the questions. If there are no questions coming in, I'll go through my question set. And as we do the conversation, I'll make sure that I, tag on other questions as we get along. Before I continue,
let me just give a shout out to Chibike. No, Chibike used to be way back. I was his manager many years ago, and we've that has blossomed to become a friendship. And I would say one of the things that told me, in terms of, for me, the learning object lesson is be a good person and be a fair person, help people to grow. So from being his manager, whom I wasn't even seeing, he was in the US, I was in Ghana then. But the friendship blossomed. I met him here in the US when I came, and even till today, I still even do real estate stuff with him. He's one of my resources, so to speak. So I'm even surprised to see him here, but it's a pleasure. So thanks for joining.
Chibike, maybe you are our next guest. We'll see. All right. Before I continue, quick one. Is everybody seeing Kess as the main screen? I wanted the speaker to be the main screen. I don't know if I got the Zoom setting right. Tell me yes or no on the chat. Is Kess the main screen? Or I should go back to where everybody will just see everybody. Okay, only when he speaks. Yes, the speaker is going to be the main screen. So I guess I'm the speaker now. All right, Kess, so tell us, what led you into real estate? Let's start from there. I can tell you my own story when I become the guest, but what led you into real estate, especially you are in Seattle. Seattle is an expensive area. So what led you into real estate in Seattle?
Okay, let me just walk a step back, because sometimes the way the journey seems when you start the journey, when you get to the track for a race, is not exactly when you started it. So a step back, I mean, as a young child, I always had this philosophy, or I grew up seeing folks who built, real estate back home in Nigeria. My uncles actually sent their kids abroad, paid school fees here in the US from multiple homes that they owned, that they were getting rent from. So I guess it was already in my mindset and my psyche that real estate is important. So I'll just start from that point. And then I was able to build my first house in Lagos in 2008 or thereabout. My wife actually was a project manager. She ran it. I was working outside the country, but she did it. So one of the things my father-in-law told me something soon after I got married, 2005, he said, look, Kess, it's better to be a small man. It's better to be a big man in your boys' quarters, to quote him, than to be a big man in another person's house and you're paying rent. So I had that psyche that you needed to own your own stuff. So when I was in Ghana, I actually, tried to buy a house. I paid for a house up front, for about 120. I think it was about 108,000. I paid up to 60%. Eventually, the deal fell through. So it was painful. But before I left, I was able to partner with folks, and we got, two sets of, we had an agreement where we are more co-owners for some property that we rent out, short-term rents, and it's still alive till today. So I already had that foundation. So coming into the US, I got to, meeting people, folks like Dio, and then I also met, there's a friend who's in Boeing, who was he's a real estate buff. He has about probably more than 8 properties here in the Seattle area, and he encouraged me. So first thing, look, Kess, move out of your house. We're able to, buy a townhouse. So understood the process. After buying that townhouse, we moved from the townhouse because of school district. We moved over to one of the better areas, and Dio can say a little bit about that, is Bellevue, which is one of the most expensive areas around, but we needed to go there because of the kids, and we're favored and blessed to get a good deal. We came here. So I already started understanding the market, what you should look out for. How do you think about bidding for the house? And I had a good realtor. Then fast forward a couple of years, just before COVID, and I were already engaging. I was already thinking, the best way to help yourself is, the theme of the meeting says, is create your future. So I started saying, okay, my first deal was, I was supposed to get a fourplex, and I was, going gung-ho, but I knew I couldn't raise all the finances. So I already partnered with a friend. We had agreed to raise the finances. So it was then, I think, about 920K initially, but I bidded, pushed for this off-market deal till it got to 830. Then I went out and reached to a guy who's my mentor. He's a Chinese guy, very rich guy, talk to him. But the guy told me, say, look, Kess, my own thing is velocity of money. This thing doesn't give me 80 to 100% within, a 1 year from what I've put in. I'm not going to be involved in it. So I looked at the maths. Eventually that deal fell through because the after repair costs, after purchase repair cost was going to be over 100, between 100 and 150K.
Oh, wow.
It was going to stretch us. So I just packed that deal. But somebody says you only fail if you don't learn from the experience. So for me, it wasn't failure. I just took all the learnings, and within, I'll say that happened in March 2020 or 2021, but within another 3 months, we had bought the first duplex. So I was able to get duplex on that market.
We are going to address that duplex soon. So speaking about your first duplex. So from that time that you bought that duplex, how long do you think you've been investing in real estate from then till now?
Okay, minus the one in Accra. The one in Accra was
let's say in
just
the
here
US
in the US
right now. In the US, how long have you been investing in real estate?
Okay, I had bought 2 homes, just 2
primary homes.
Okay. Yes, I bought a home, that was a townhouse. We sold it. So I understood the dynamics of, the cost basis, how the IRS sees your cost basis of owning a house and when you dispose it. So whether it's a capital gains or capital loss. So that concept was already in my head because I bought something, sold it, and gotten something else. That was in 2019. So 2019, 2017, we bought the first. Okay. 2019, we bought the next personal home. Then 2021, we bought our first commercial property. Yes.
Awesome. So what's your portfolio like today? Like how many?
So I have, minus my personal house, I have 4 doors. So that's 2 duplexes, all within the space of 12 months or thereabout.
Oh, that's good. That is speed right there.
Yes.
Especially
buying and rehabbing and doing everything and getting tenants into them. That's what's
I remember you told me about you were going to rent a truck and you wanted to go to Home Depot. I'm like, man, this boy is getting this real estate bug so fast. So tell me, you are invested in Seattle, Washington, and a lot of people always worry about the monetary aspect of real estate. Considering the fact that, yes, you've mentioned the Google, the Facebook, the likes, but also, how do you invest in a very expensive market like Seattle, buying 2 duplex in a space of 12 months?
Yeah, the key thing about it, honestly speaking, is finance. And let me just caveat it. We've discussed this. I want to diversify my portfolio. So, but are there benefits here? The key thing is you have to be smart about what your investment strategy is. Number one, you are looking at, what is the potential appreciation of the property? Mm-hmm. The high market here, like in the Seattle area, values go up pretty fast.
Very fast.
My personal home, for example, is one of the assets that I've been able to liquidate to squeeze out financing from, because the value minus the recent housing recession or whatever you want to call it, the value was doubled, almost effectively doubled within a space of 3 years, from 2019 to 2022. So because of that high valuation, I was able to squeeze out some HELOCs and such.
Let's talk about that. That is a very good topic. So speaking about, you have your primary property, your primary residence, and because you bought it in 2019, you say you bought one in 2017, one in 2019. So let's assume it's 2019. The 2019 property, it increased in value, right?
Absolutely.
So tell us the process, now for everybody listening, it's always important to carry everybody along. You just said you squeezed out money. While I understand you're squeezing out, what does it mean? So give us a rhetorical, let's use a abstract value. Let's say the house was bought for 500,000 to make it easy.
Yes.
It increased by 20%, 30%, maybe 600. How did you get that extra equity out of that property? What was the process? And how did you put it in the duplex that you end up buying? So that people can understand other ways of how they can finance properties.
Yeah, so let me use this. I'll make it very easy. It was let's just say the house was 1 million, slightly under 1 million.
Okay.
But
You
then
are
it
going
grew.
you are going double. I said 5, you said
Yeah,
1.
yeah. So I just to make the calculation easy.
Okay, all
1
right,
million.
let's go big.
So 1 million, then it increased, and this is actually the ratio, increased to 2 million, right?
Okay.
Now, so that means that your equity has effectively grown from, let's say you paid 20% down. If you paid 20% down, it was 200,000. Now, the total equity you now have is 1 million plus 200,000. So that's 1.2 million. So the bank looking at that place, they know that, look, this guy, this is what he owns. So because you have a high debt, you have a low debt to equity ratio, then it's good for them. So debt meaning how much you owe. What you really owe is 800,000 approximately, assuming zero payment of mortgage. What you owe in terms of the worth of the house is 1.2 million. So the process is you basically go to a bank, a local bank. I would recommend credit unions. Generally, credit unions they tend to be more humane when it comes to dealing with people and getting equity. So you just basically apply for what is called a home equity line of credit. Now, why do you want a home equity? A HELOC? That is better than getting. It saves you the stress of going to look for, start collecting funds from a credit cards and all that. Credit cards are very expensive, 21, anywhere from 11% to 21%. Instead of doing that, go to a home equity line of credit and get a fixed rate. Just get a fixed rate for, I think it's a particular period of time. Then you can work with that. And that's exactly what I did. So able to pull out, like if you have, for example, let's say if the house is worth like 1.6 million, you can easily get something like 200,000. And the thing about it is it's easy because it's easy they just don't even do inspection. Now, if you want something more, you can get as much as, and I can even quote another guy whom I know, his personal house about maybe $3 million in Linwood. And he was able to easily get $500,000. So with that, he paid down all his credit card debt because he's the kind of I'm afraid of credit card debt. I don't really like it. I try to run away from it. So use that to pay down credit card debts and then consolidate all his expenses for his real estate.
Good. Investments. That is good. So I put it in the chat. If you don't know what HELOC is home equity line of credit. I was with Chibike earlier so when we are in the same circle, me, Kess, Chibike, friends, we all know we all know one another. I was with Chibike in Austin. We were at his house, in March, and we were talking about HELOC. We actually went on a long walk. We were comparing HELOC versus cash out refinance, the pros and cons. So, if you don't know what that is, I put it right there. Check out HELOC. You can also look at, cash out refi. Those are different ways that you can actually maximize the money, the equity that you have on your property, especially at this point whereby real estate is going bonkers and they've all appreciated in value. All right, let's bring it back.
I can actually even talk about the cash out refi. I actually did that. So the first one, I don't know if I told you about, but the first one I did, I was able to, and let me just give some lessons learned here. I did a cash out refi, so I refied it, but the value was not as I expected. And these guys are a bit smart. They basically valued it for less than we're targeting about 600K. They came back with 500 and something thousand or thereabout, right? For the first duplex. Eventually I got squeezed at maybe almost $30,000, but there are fees and the other things. So the fact that you start a refi process does not necessarily mean you have to finalize with those guys. So one has to be able to look at the options, have a plan A. If these guys have, what is the bottom line, in terms of what the valuation will be, and then you can pull the trigger and say, look, I'm not going forward with it. But I already reached the point where I didn't have that backup plan. I just felt it was going to go well, and the feed signals I was getting from my financing guy was that it was going to get to a particular value. So just lessons learned. But cash out refinance is also a very, very good option to squeeze out, get some liquidity from assets you have.
Good. I've actually done cash out finance. We did a cash out refi on our first property. Our first one was bought in 2012, and I think the money almost already doubled by the time we were going to sell in 2021, I think, or 2020. But that was what we did a cash out refi. That was the money we used to buy our first rental property in Macon, Georgia back in the days. So that is good. So moving forward, looking at and please, if you have any questions, throw it out there. I can answer some of them. Other ones I will ask Kess as Kess go along. Now I know you said you've done duplex and you've done two duplex. What is the goal going forward? How do you intend to scale in that? Are you okay? Let me go back. Are you going to be focusing only on Seattle, or are you looking at long distance real estate? Because then that would decide if you want to scale into 100 unit, 50 unit, because except maybe you have some money in the bank for you to do 20% down in Seattle. So what are you thinking when it comes to long distance real estate investing? What is your view?
Okay, I think you already know my view, but for the benefit of others, what I want to do is I think I want to, the key thing about this, my next goal is basically scaling. So I want to scale and I want to diversify my portfolio. I want definitely more in terms of having minimum 10, 20. If it's very small, like fourplexes here and there, 16, 20 units. And I want to do them outside of this place. The reason why I want to do them outside of this part of town is, number one, the laws are changing. And the truth of the matter is politics affects economics.
Yep.
For example, here in King County, where my primary home is, I don't invest in where my primary home is. They've changed a lot of laws. For example, you're not supposed to do background check. For heaven's sake, somebody is coming into where I've paid money top dollar from. I shouldn't check them. The neighbors don't have the right to know who's coming in and stuff like that. So I want to go to where the laws and the what they call them policies
are favorable to landlord.
Favorable to landlord. Here, I also learned a lot. It was difficult for me to evict because of COVID restriction. It was very difficult for me to evict one of my tenants after
I was there too. Yeah.
So he knew what if I eventually had to pay them off and give them 8 days, at Jara, to use the Nigerian expression, give them extra 8 days. So it's tough. So my rule, what I'm going to do is go down south, buy bigger properties, and then you begin to look at the rent to price. The price to rent ratio is smaller, and that is what you want. You want a smaller price with higher rents. So that basically gives you a smaller ratio. The thing about it here is that you have high rents, but your prices also of going in are high. It's double.
Yeah, okay.
So that's the strategy going forward. In addition to that, I'm also thinking about some potential, just to sweeten the portfolio. I'm also thinking of moving, and I've discussed this with you, Dio. There are two things I've been considering. We'll not discuss it at length here, but I'm looking at storage very strongly. I sent a proposal for you to help me review. Storage is a sector that I think is interesting, has its own nuances. I've also thought about, things like gas stations. Interestingly, I networked with a guy, I think about 6 weeks ago. I got to know him. Very unassuming guy, but this guy has 4 gas stations, all over, not in Seattle, but down south towards Tacoma, Lacey, Olympia, those places.
All your money no dey finish.
Yeah, so he has about, that's it, he has gas stations. The only thing I'm sorry for him is that by 2035, our very wise people here in Seattle, they're going to ban gas cars. So I don't know what the guy will do with his gas stations then.
Well, that's why I bought them.
That's story for another day.
That's why I bought them in the south, not in the west. So quickly, before I go to the question on the screen, it's talking about storage. I was actually wondering what storage meant when I first got to the US back then. I was like, who puts stuff in the storage? Why do you buy things that you don't need? And who do people even use storage? I actually bought a book on storage, for my 2023 reading book. Paul Moore is he talks about storage a lot on Bigger Pocket. I think the title of the book is Storage Up or something. So I bought it 2 days ago. I was just less busy. I bought all my 2023 books. So I bought 11.
Are you reading the book now? If you are not reading it, ship to me. I'll ship back to you.
Well, the book has not even arrived from Amazon. I just bought it 2-3 days ago. I don't use Prime.
You can redirect it.
Yeah, so I can redirect it. All right, moving forward. I have a question from a very good friend here, Biodun. He said, how will the housing crash or correction? I don't think we're in a housing crash, but how will the housing crash or correction, which is a very better word, affect the HELOC market? Can loans be called
Yes.
on those properties?
Yeah, so it's a very interesting question. Like, for example, one of the things I did, and I have to be very honest and frank with everybody. Let's go in with our eyes open. My loan was about 4.75 for the HELOC. It wasn't too much. So now, I mean, it's been stable for well over a year. Now, a little over a year, it went within the space of about 10 days. It went from 4.75 to 5.3. Another 7 days, it went to 6.09.
So your HELOC feels
So
like a
divide that
smartphone
6.0.6. So sorry.
I said, so that means your
What
HELOC,
is
your HELOC fees rate sounds like a good move. You're looking
No,
at it now.
I didn't fix it then. That's the thing now. I didn't fix it because fixing it then didn't make sense. The fixing was going to be around 5. So what I'm going to do now is I'm going to try to fix it for at least maybe 3 years or 5 years. Just fix it, hold it down. But what I've been doing is accelerated pay down. So, put 5K anytime you just gather small funds, smart pay down. I think the second part of it is according to Yemi, yes, it's variable interest.
Yeah.
So you want to minimize variable interest. And by the time I did it, the conditions of, the real estate interest rates were very different. It was more stable.
So do you think loans can be called on those properties that are on HELOC? Okay, let me make it simple. Do you think there is a housing crash or there is a housing correction, or what is going on in the market right now?
There's obviously a housing correction. Let's be very frank. There's a housing correction. There's actually some people actually say there's a housing recession. The truth of the matter is some things were completely, sorry, pardon my French, say complete more bet. Some things were daft and stupid. What do I mean? I mean, sellers will not want to even put in anything in the house. They want to sell it at top price. It didn't make any sense. So now that interest rates have gone so high, everybody has backed out, and then we have inflation. So what you could buy with $1 before is costing you, I don't know, $1.09 or something like that. So it's a bit higher. Now, I think the key thing there is a correction going on. But how do we navigate it? If you have cash, full cash is a good time because things have swung to the buyer. So you can actually even get more creative with respect to deals, having sometimes the seller to even finance part of the deals. So there are good opportunities there. High times, so-called good times, so-called bad times, there are always opportunities that we can leverage. So I personally have been thinking about what are the methods and mechanisms when we'll be able to leverage. Because we have to, if we don't take advantage of now all the whole stress, I don't think it's wise. We must take advantage of it.
Okay, moving forward. All right, thank you. It's a question from, can you hear me? Is my speaker okay? I was hearing some crash. Can you hear me? Can you hear me, Kess? Okay, good. I don't know, I thought my speaker was acting up. All right, considering, or is it Kess network? Hey, Kess, can you hear me? I think we lost Kess. Hello? Let me see. I think we must have lost Kess there. While I wait for him to get back, it's actually showing, but I think his sound is not good. All right, maybe I can help Soji. He said, considering you are still building your portfolio, do you have this duplex under your LLC or your name? I'll let him answer that question when he's back, but let me answer from my own point of view. So when we started our own real estate investment, yes, we bought duplexes under the LLC.
I'm back. My network was a bit.
All right, thank you. You just saved me from answering my questions. All right, give me a second. Let me go back to this settings view. Give me 1 second. Speaker. And I am not good with this Zoom thing. Oh, Jesus. All right, good. I figured it out. All right. So question is, considering you are still building your portfolio, do you have this duplex under your LLC or your name?
No, I got them under my name, but I'm moving them. I've started the process to move them to the LLC. But from a renter perspective, the renter doesn't, there's no business between Kess and the renters. It's between Kess and the LLC. I mean, between the renters and the LLC. So from a renting perspective, they don't rent from me. So it's the entity that they rent from. So from that perspective, I sort of have a kind of legal framework for that to minimize some exposure.
Okay, thank you. Yeah. Next question. Out of curiosity, You mentioned a deal that fell through that requires
Yes.
so much renovation. Will you encourage flipping or buying a duplex in a good state where you can rent ASAP?
Right now, flipping is the no-go area because of the current rates. So the variable, because of the rates, interest rates that we do. I mean, Colin Powell just said a couple of days ago, there'll be more pain. So maybe people who were going with very, very big grocery shopping will have to multiply that by a fraction, right? So they've said it, they are going to still increase interest rates. Who knows, it may get to 10%. So we just, flipping is a no-go area. My personal philosophy is long-term. So long-term, you're looking at 5 years, 10 years, at the very minimum 3 years. So that fix and flip, the pressure is too much. You have to build, and then you have to always have an appreciation market. So what's the hedge? How do you hedge against it? So it's difficult to hedge against that unless you have, maybe a big enough portfolio where you have some that are large volume of homes, then you make small margin on them, but because of the large volume, it can accommodate losses that comes from flipping elsewhere that you cannot easily sell. And look at the inventory, almost like just Google just put housing inventory change over the last 3 months. Everywhere you have more inventory in the market than has been for the last few years. So flipping is more complex. It has been traditionally more a lot
profitable.
Well, I won't say it's profitable, but one of my own strategies too is like, everybody hates Trump, but the guy is simply using mechanisms that were placed there by the government. The government wants us to build houses because the last time I checked, there's no e-house. Human beings must live in physical houses. It's not like your banking where you say e-wallet, this, that, and the other. So the housing market is designed for you. If you are smart enough, you can minimize your taxes. So if I flip, basically, I'm just giving these guys my whole capital gains, 15% and all the rest. I don't want to do that. If I can pay zero taxes, zero real estate or real income tax, I want to pay zero. That's my personal philosophy.
We will get to the taxes later. Yeah. In fact, I was hearing something about, well, let me not go into the symmetry and all the bearing of people in Trump estates now. There's interest. So just to add to that, flipping is not a good idea right now also because banks will not borrow you money to flip. Even if they're going to borrow you, the interest rate is crazy. Also, the hard money lender that will borrow you money. Remember, hard money lender interest rate is always higher than bank rate. Now, when bank rate is not good already, you want to go and get hard money. Now, the problem is this. If you provide your W-2 and everything and they borrow you the money, which is not a problem. The problem is if you are not able to return back their money in due time, guess what? You will lose all the money you have put into that property because that property is the collateral. So I will not encourage flipping right now. What I would rather encourage is the second thing you mentioned. Buy a duplex in a good state because prices just keeps going up. That's one thing about real estate. It's very hard for you to see a property you bought 10 years ago that has lost its value today. It just keeps going high. It just keeps going high. So, all right, moving forward. So, like I said, I'll be going through the questions from online rather than my own question sets. But we'll probably I'll ask you one or two more questions along the line so that people can understand the basis of real estate. So this question is from Sonia. As a beginner in real estate, is it better when you say beginner? That makes me laugh, Sonia. Is it better to buy the property under your name or try to build your business credit and buy the properties that way?
I would say that don't wait you can buy under your name. There's nothing stopping you because if you have a fairly good job or you believe you know what you can qualify for, first thing, know what you can qualify for, then that gives you a basis. Let's just say you can qualify for a loan of $300,000, for example, then and you're paying 20% down. So it means that you can pay, put 20% on that. It means that you can buy a house of 360,000. Sorry, I'm using this big figure because of where I stay and what I've been involved in. But that simply start with that. Then you now, for the next step, you continue with your business as you are running it, and then get the business entity, and then you can buy under the names of those ones. But the thing about it too is sometimes when you want to buy under the business entity, they may start asking things like show profitability, etc. So they start digging into some of those finances. So you may want to at least start first, buy your own, then push it into your entity later on.
All right, that is a good strategy. There's so many strategies out there, and that was actually what we did. We started with no, well, let me rephrase that. Because we had a cash, we bought the first property in the LLC, then we bought few in my wife's name, then we moved with other properties in our business name, Blooming Edge. We've done a mix of both. We bought some in my name, some in my wife's name, but everything we have now, we've consolidated everything back into our LLC. So either one work. It doesn't really matter if you're buying in your name, in your LLC. As you grow, you will start understanding better, and you can move everything into either your S corp, your C corp, and what. Don't get hung up on the name, the entity. The most important thing is just start something, then you can grow from there. All right,
Yeah.
moving forward.
Can I ask? I don't know how you want to do it, but there's a question I've seen by Remy, but that looks interesting. But
I will definitely
yeah, I'll let you drive.
I'll definitely get there. Okay. So is there a website? I'm asking this question secondly, because I already answered the Biodun. But is there a website that you recommend for grades for the housing market in different cities, counties, and states? Seems like the housing market vary from city to city and county to county. I have a website I've shared with him, but do you have a website you can share? Maybe I can.
No, I think you've shared one with me before. The one we use, that one for commercial property, and I think I'll rely more on the ones that you have.
Which one is that? Is it Craigsy?
I can't remember. I have it in my. I don't have it in my. Remember when we had our one-on-one? There was this one we used for commercial property. There are two of them.
You are putting me on the spot now.
No, don't worry. I can grab it. I'll just check my email. I can.
Okay.
Before the end of the call, it's in my email box.
All right,
because,
please.
Like, I think the key thing, what I want to just add to what the person has asked is real estate is local. It's very local, and even within the state, it varies. So this thinking that people have, oh, I'm investing in the US. The US is a huge and diverse market, and within states, things vary. So we'll definitely share with you the websites that we use.
All right, thank you. Which is better for rental, single family home or duplex? I've been looking out for single family homes. Thank you for sharing, Remy.
Yeah, let me answer Remy. I like Remy's question. My strategy, my personal strategy is a minimized vacancy. Now, how do you minimize vacancy? You minimize vacancy by reducing the probability that you have 0% occupancy. Now, if you have two, the likelihood of having everything with no tenant at the same time is low. But a single family home, at least at the point one tenant is leaving, till you get another tenant, you have some, vacancy there, and you want to minimize that. So that's why my strategy for renters has always been going multifamily, right? Generally. So that's for my own personal strategy. But the difference is that single family homes appreciate more in value. So when you want to sell them, the appreciation on it is more. But if you're in a market where the appreciation is not so much, I mean, what's the point? Just think about cash flow. My own strategy personally is just cash flow and long-term, holding it for long-term, because there are things that help me. I don't know whether I should dive into the taxes, but
No. Let's leave it for now. Cash is king. Remy, if you want, I mean, that's a good response from Kess. So thank you. Would you recommend self-financing when starting out in real estate business, or loans because it's business?
If you do have the cash, the truth of the matter, cash that you put in that is working for you is better than money just sitting in the bank. I mean, I've had, there are times you have, let's not mention figures, but multiple thousands of dollars in the bank, and you're getting like $5 as interest for a month. What's the point?
Per month.
Rather remove that and then use it to buy. So wherever you can finance, but have other intelligent ways. You can leverage. I have a friend who has done hard money, but that one, you need to be very brave and smart.
You know what you're doing.
For example, now they will give you 12%. They give you maybe 400,000, and you have to pay within 18 months. Some instances 6 months. Some instances 1 year. So it's really tough. But I would say if you have the money, use it wisely. If you have the money, distribute it. Use it wisely for yourself. But also make sure that you have reserve. You don't want to put in all your cash and then you have nothing in the event that maybe at least you have something to pay your mortgages, your personal home mortgages for at least 3 months to 6 months. That's your at least fallback plan here.
All right. Like I promised, I want to go through the questions, but I also want to make sure Kess tell us a little bit about his journey in terms of finding deals, pandemic, and tenant screening. Those are important questions that I want us to talk about in his real estate journey. But I'm going to go through the questions. Clara, you asked a very important question. I was looking at duplexes in DFW, but my realtor, which is our own realtor, recommended single family primary home to move into it in bracket to take advantage of the lower interest rates and down payments, then rent out my current home. What are your thoughts?
So basically, rent out her current home, then move into a different family, move into what do you call it now? Into the new home that she buys, right?
So basically, I guess, which I don't want to assume, but I can answer the question but let me make it clear. I think the question is this: she's looking for a duplex.
Okay.
But realtor is saying go and get a single family because of the low interest rates.
Mm-hmm.
Then you can now rent out the property to a tenant. She will move out. Maybe she'll go and buy another one.
Okay,
So
I have an idea. I have an interesting idea. There are some banks. If I actually met with a banker a while back, she has become my friend, Helena. There are some banks that actually give you lower rates for what is classified as a owner-occupied multifamily home. So if you are buying a duplex and you tell them you are moving into it, you will get an interesting rate. Now you can actually let out your own home for, I don't know, 3 months or put it on the market. Let's not talk about that too much, but put it on the market for 3 months. The other one becomes your primary home on paper, and then you reverse. So you can get a lower loan for that, for the multifamily home, by classifying it as home owner occupied duplex, and then you reverse. Nobody's going to be monitoring, are you staying in this place or are you staying in that place? So there's a way you can actually get that duplex for a lower rate if that is really what you want.
Good. So Clara, I've sent you my phone number. Let's talk after the meeting, but just to make it easy, let me explain for clarity. A single family, a duplex, a triplex, and a fourplex, they are all under the same type of loan. If your realtor tells you otherwise, tell him I said he or she is wrong. 100%. A single family, a duplex, a triplex, a fourplex, they are all under the same loan. You can get FHA loan for all those properties at the same time. You can live in one of those units in a duplex and rent out the other one. If you have a triplex, you can live in one and rent out two. If you have a fourplex, you can live in one and rent out the other three. So nothing stops you either buying a single family or a duplex in DFW or wherever. You can live in one and rent the other one out. It's the same down payment, FHA 3.5%. Or if you want to do a conventional, you will do 20. Or if you have 10%, then you will pay mortgage insurance payment as the case may be. So you don't really have to move out of that house. Or I think we lost Kess again. So
I can hear you guys.
Okay, but so let's talk further about that. I can introduce you to other realtors that maybe they will be able to understand what you want to do better. But I don't think you should settle for, oh, should I buy a single family now because the interest rate is low? It's the same interest rate you buy for a single family or a duplex or a 3 or 4. It is when you get to 5 units that you are entering the space of commercial multifamily, and then you'll be dealing with different banks. You'll not deal with the West Fargos and the Chase and the Bank of America again. You'll be dealing with a different kind of banks. So like the one Kess was talking about. So, but you can call me after the meeting. All right. Well, we still have a few minutes left. As a first-time investment property buyer, is it better to use personal money to buy a rental property or use a bank loan to finance it? What are the pros and cons?
Like I mentioned earlier on, if you have cash, use your cash to wherever it can get you to. But right now, bank loans are really, especially if you are tying down for the long run, they are very, very high. So if you want to use bank loan now, given the current climate, I would say use ARMs so that you can adjust them over time. That is at least fix it for a number of years. Then, make sure that you can at least pay down a large fraction of it. But if you have cash now, it's better to just use your cash because your cash is cheaper than as much as possible what you pay for. At least you pay yourself 0 interest compared to what the bank will charge you, which may be as much as 5 point something %.
All right, thank you. Moving forward, is this the best time to buy a house?
It depends on what kind of house are you looking at. You look at personal house.
Yeah, I
It,
guess
it depends. It depends. Now, let me put it this way. Let's just say, for example, I have $200,000. I have nothing I'm doing with it. Clean money. Best now means that since the buying power has swung from seller, the power has swung from sellers to buyers, it's a good time. If it's for personal home, or even if it's a real estate property where I have the full cash available, it makes sense because it means that you can make demands. You tell the guy, upgrade this, upgrade that. I'm going to do rigorous inspection because there are fewer people buying. And once the demand has dropped, as a buyer, you have more power. So it's a good time, like I mentioned earlier on in the conversation, it's a good time to buy. But the question now is it a good time to buy with high leverage? I would say no, right? And leverage meaning more with higher debt. So you don't want to buy with very high debt right now, but you want to buy if you do have cash available.
Okay. Yeah, I think what I would advise Felice. Yeah.
I'm driving, so I can't really text. Do you mind if I ask my question verbally? It's in regards to the last question.
Okay, go ahead.
So all the data now, they're showing that the current slump on housing market is going to continue for the next 6 to 12 months. If that is true, why would you suggest that it's a good time? Now it's a good time to buy if there is a potential, for the reduction to continue like this. Why is it a good time to buy now? Why can't I just wait?
Okay.
Especially if I'm not buying a house that I'm going to live in, just an investment property.
Yeah, you have a good question. So you asked a very good question. I think the key thing about it is the reason why I'm qualifying that it's a good time is because the buying power has swung primarily from sellers to buyers. That's number one. Then the second thing you are looking at now is cash flow. So for me as a cash flow investor, if anybody is a cash flow investor, even though there is a slump, you are not bothered about the appreciation of the house right now. What you want is, because less people are buying houses, more people are renting, rents are going up. I mean, I just rented a 2-bedroom flat for $2,500. The 3-bedroom in one of the duplexes I had before, I rented it out for $2,350. But I'm renting a smaller unit, smaller square footage for higher. So rents are increasing crazily right now. So for a cash flow investor, it's a good time to get because if that money is not going to give you rent, right? The money is not bringing rent, but if you have the assets, it can bring in rent, plus all the other benefits of owning real estate.
All right. Well, let me not add too much extra. Thank you, Tunde, for the question. All right, let's move forward. I don't want to add too much extra to the questions being asked. So, let me see. Wow, a lot of questions here. Is investing in REITs still a good idea, especially since commercial real estate is in flux right now because of all office occupancy rates since COVID started? Your questions are always one killer. So, all right, question is investing in real estate investment trust, if I'm correct, that's REIT, right? Is REIT still a good idea, especially since commercial real estate is in flux right now? What do you think, Kess?
Yeah, I've not invested in REITs, but I've done a lot of study. Actually, in my group in KC, we had one of the biggest REIT investors, I think it's a GM. It was 1 year my senior in high school. He came and he discussed with us. I think the key thing that one has to look at is, number one, what is the space that those REITs are in?
That's good.
I can tell you something now. Amazon, Microsoft, I saw just yesterday or 2 days ago, they've actually shut down some of the data centers that they were going to build or rent. So if a REIT is involved in, this kind of cloud space, location, so you have to look at the sector. Generally, REITs are good, but look at where they are involved. If they are, it says a 70% rental market in some of all these areas in the South, like Nashville, where things are growing, then you would still want to invest in that. But I think it's all REITs are not equal. That's the bottom line. Look at where they are in, the space they are in, and then look at, see how less susceptible they are to the vicissitudes of the market. I would say if it's storage is a good one.
That was That was what I was going to mention. Like storage is a good rate to invest in. All right, moving forward, I think we have just 2 or 3 more questions. Then I'll ask a couple of fire rounds, and we'll want to wrap up. Duplexes are sometimes older properties. What is a good range when it comes to the age of the property?
Okay, I will tell you. You see, I've been somebody like a friend of mine. She says that they said Kess just he got from secondary school to PhD in real estate, because I actually bought a property that the roof was bad. By the time we bought it, the inspection did not reveal that. So I had to re-roof completely, do a lot of work on it. So personally, I'm not afraid of any work. The only caveat for me is when there's foundation work. If there's foundation work, then it's a big deal. But no foundation work, there's nothing personally I'm afraid of anymore. There's nothing. The only thing about it is have a proper valuation and know what your after repair costs will be and potential after repair value. So the age doesn't really matter. What's the house? What's the thing that is not working? And then, for example, another thing again that may trump you up, maybe sewer. So do sewer line check, because that can cost you as much as 10,000 to 20,000 if you want to fix the sewer line.
That's good. Thank you, sir. Thanks for your time. Final questions on the chat before I ask you a couple of more questions. For ELOC, is 15 years better than 10 years loan repayment time? Which one is better, 10 or 15?
And normally 10 will be more expensive. It will be less expensive. It will be less expensive from an interest rate perspective. So 15 years definitely will cost you more. So you want to think about how long you are going to hold the property for, right? How long are you holding the property for? I mean, so if I want to just look at it, I would say for me personally, since I'm a cash flow guy, the one that will give me less per month, I'm going to pay less per month for the 10%, but it's a bit more aggressive. So you pay more per month.
You pay more for the
you pay more per month for the 10%. So I would go with the 15. I mean, from a cash flow perspective,
because that will allow you to have more cash flow from the tenant.
More cash flow coming in, yeah.
Yes. Wale, can you please go on mute? Thank you. Okay. All right. I think I was able to ask all the questions on the chat. How do you well, not how you found. How do you find deals that and what tools do you use to analyze deals?
Okay, in terms of analysis, let me start with finding. I've not done some of the I don't use some of those methods like cold calling and all that, but I do understand the principles. What I've done is to get so far. The way I've been going about it is to get people who understand the market locally, and I try to go off market. My major strategy is go off market, look at what is not listed generally. So the first deal that went bonkers was one that was off market, fantastic deal. Eventually, if I had bought it, it would have been 830. After repair value was like 1.2 million. Eventually, it was actually sold at 810, and it was sold for 1.2 million, and it was bought for $800,000, something like that. So I like using real estate guys who are young. Let me not use no ageism. People who are very active and they can do a lot of cold calls to be able to get off-market deals. That's the best thing, because they know the market most likely better than you and have more time. Now, if you are less busy, you can do all those cold calling yourself. Then for analysis, I like using back of the paper envelopes. Back of the envelope, calculations. Number one, look at the price to rent ratio. Is it high? What's the value you want to look at, right? And then look at things like rentometer. Rentometer gives you like the medium rent, the maximum rent for those areas. And then you look at, okay, if you truly repair this value, if you repair the house, what's the cost to it? Or how much will it cost you? And we'll be able to get those kind of rents you see. Then that gives you it gives you a kind of benchmark to see whether your cost basis or the cost you are using to get the house makes sense. So for example, you buy a house of where you expect rent for, let's say, $1,000, but you know that to be able to meet your financial goals or cash flow goals, and the rent is like 600, it's not going to cut it. So rentometer is one good tool to know what you used to go, whether you should chase a deal in an area or go for some other areas.
All right, thank you. That's good. While Kess was speaking, I sent 3 links to the chat. I used deal check what do I use? I use Do Check to analyze. I have an Excel sheet I use, but I also use Do Check to fact check what I did, because the Do Check actually helps you to, it gives you in a very good PDF format, and is presentable to the seller, to your investors. If you are syndicating or you have partnership, you know, you don't want to come and collect my money and you're just using an Excel sheet. I don't know where, if the percentage is wrong, or there's one multiplication that is wrong somewhere in the Excel sheet. But the dealcheck.io is very good too, and you can get it. It's free. You can use it online. Rentometer and Rentcast is something I use just to check the what the rent is in the area. So Ngozi also sent another one. Coach Carson, yeah, Coach Carson is good. I just bought his book, something to retire, like that. Coach Carson, he just moved to Europe. He's somebody that also started his real estate from ground up. Okay,
Mm.
so those are good tools you can use. So thank you for sharing that, everybody.
Yeah, thanks.
So quick question: how do you screen tenants? Kess, tell us a particular screening you went through with some of those your 4 tenants that you have currently your duplex.
Okay, so that's for me. I use leaserunner.com. So basically, let me even give you the first one, that the first home I rented out, the 3-bed one, but I used what do you call it, leaserunner.com. So leaserunner, typically you do background check. So the criminal background check, you check their credit, you check their bank, income statements, and then eviction type things if they've been evicted before. And usually it's anywhere from, I think, about $65 or less. It could be from 15 to 65 bucks, depending on what you check. And there was a particular case where there was a guy that we actually wanted to, to allow, but they flagged that, potential sexual predator or offender, something like that, because his name tallies with something in one of those databases. So that's what I use. And one has to be very careful about that. You don't want those kind of people coming to your property.
All right, speaking of being careful, that was my next question. What are the red flags you look for when screening tenants?
Okay, you have to look at, for example, I would say, I don't know how to call this one a mistake. People, in the US, 40% of people have dogs. Now, the question now is, or dogs and other pets, and they come with their own overhead, especially cats. The pee and all the rest is difficult to handle. It causes, all sorts of things to the property. So the question now is, are they giving you all the information? So you have to be very careful in your leases that to qualify, number one, the animals are clearly articulated, because animals can damage stuff. That's just it. And do they have canine insurance? So the red flags will be, number one, if the income is too low, normally the background check would tell you, or the screening report will tell you the income to the rent ratio, right? But then you also, when the credit check comes with low, that one is also if they have a low credit score, just a fair credit score, that's also a red flag. But it can be counterbalanced if they have enough income. And then check what the source of the low credit score is. Sometimes it could be medical issues. If it's medical, it's fine. But when you begin to see credit card debt, collections, that one is is more problematic.
All right, we are getting to the end of everything. Cash flow versus appreciation. This is me asking you questions now. Yeah. Cash flow versus appreciation. Which one do you focus on, especially in your market?
No, right now it's cash flow that I've been focusing on. I still intend to, I'm intend to diversify my portfolio for scale and for variety. So for scale, I'll go into more real estate, more multifamily property outside this belt, outside this zone. But I also intend to, for strategic reasons, go into some single family homes. I'm thinking of places like Nashville, that Texas, and some place in the South, because I know they will still appreciate. And then, the day I decide to jack back from here, you have something that you can play around with, either as a 1031 exchange and all that kind of stuff. So I also need something else that can be used either for some kind of single family home, second property and all the rest. But it gives me a tool to be able to play around the 1031. And 1031 simply means a means of exchanging property to be able to sort of tax-free while you buy something different.
Speaking of 1031 exchange, I actually need to bring my 1031 exchange person here. We've done a couple of 1031 within the past 1 year. It would be nice for people to understand how 1031 would be a very good tool. So I feel like I'm like a 1031 exchange king now. When I was starting 1031, I was like, is this thing going to work? Now I'm like on my third 1031. I'm not even scared. I'm like, 45 days. We'll find
Yeah, let me
something.
just nuance, just drop a pin on the question. I am more of cash flow because in the long run, cash is king, and then you can always dispose the having that asset is a vehicle that gives you multiple advantages versus just appreciation. And appreciation, to be very frank with you, appreciation is sometimes can be a mirage. Give you an example. We bought our house, one house, 475K. On Zillow, what was it? When we were supposed to sell it, 540, we listed it for 530. Stayed in the market for 6 months. Eventually, we sold it. Guess what? 475. But the beauty was because it was calculated as a capital loss, the IRS man smiled at me. That's the, the beauty of it. But sometimes appreciation on paper is different from what people in the market are willing to pay for it.
Thank you. All right. Final questions on the general one. Tax advantages. What are the tax advantages of investing in real estate? I know you've talked a lot about taxes. You dropped Trump in one of those conversations. You talked about taxes here and there. For you, why do you invest in real estate when it comes to the tax side of it? What are the advantages for you?
Okay, pardon me, I will be a little bit lewd here, but your W-2 is subject to, you are getting screwed left, right, and center by your W-2 money. Because before it gets to you, everybody has collected their own Medicare, Medicaid, the tax man. Then
Social
you are the one
Security.
Social Security. The guy who did the work is the last person.
FICA.
All that, and all that, plus your state. Thankfully, I live in a state. I don't think I'll live in a state where there's state income.
Come to Texas now, Kess.
But here they don't. There's no state tax.
But we are cheaper here in Seattle. I'm trying to recruit your family.
But you pay as much. Well,
man, I mean,
So I think the key thing is the vehicle. The beauty of it is, number one, when things that you spend on your property, basically is taken away by default. It sort of reduces your adjusted gross income. So that's the beauty of it. While at the same time, it's also increasing the cost basis of that property by the time you sell it. So generally, all things considered, it reduces how much you have to pay to the government as taxes. So that's just the simplified version of it.
All right. I was trying to type the response to Biodun, but yeah, let me just answer you quickly. Yes, Biodun, there are rumors to 1031 exchange being scrapped, but there's another program called Opportunity Zone that the government just approved it was during Trump's tenure.
Yeah.
And it was, I forgot this senator, one of those black senators that contested back then with Biden, that championed it back then. But yeah, there's always something that's going to come out in real estate. The thing is this, all these policymakers, they are also investing in real estate. So they do some of these laws, they know about it, and they always, do these things. And I would just, like you said, consult CPA before making moves. You are definitely right. 100%. I do all these things with my CPA. So it's not like I'm doing this out of the blues by myself. I have a CPA I use because we do real estate on a, we are getting a little bit, the scale is getting bigger. So I had to use a CPA. All right, I think that's about it. Before we go, I'm going to share my screen again for your contact. But before we go, I have what I call the quick questions. I think it's like 5 or 6, so that you can just tell us a little bit about you. Now, these are personal questions. Are you ready for that?
Sure.
Yeah, I'm trying to wrap up. So, first question. Is your spouse, now your wife, I wrote spouse so that if it was a man or woman, is your spouse into real estate? How did you convince her? I know your wife. So
yeah, I mean, the truth of the matter is that, yes, she supported me. I was almost in a ditch. The last one we bought, she rescued me where I needed to raise 32,000 in one day. She was the one who came to the rescue. So I mean, she's supportive of it. She don't do a lot of the food soldier work, but she's supportive of it, and she knows that in the long run we are building assets. When we built the first house in Lagos. She was the one who said, "Look, you go and take this money and go and buy the land." So and she's supportive of me overall.
All right, that's good. That's a good one. My sister Buki, you are doing well. We'll see in camera. All right, next question. What is the one thing you are currently working on or looking to improve on this year? Personal.
There are a number of things that I'm looking. I mean, I'm just looking at my main goals, the key things that I set for 2021. For 2022 was basically, I have it actually listed over there. Well, in terms of my finances, basically grew my portfolio. That's one goal has actually been, I planned I must get at least move my portfolio this year by at least 2. So I've moved, I think I'll say 50% of that has been achieved. Increase my finances, change jobs. So, more money coming in and all that. And then, but in terms of like from a career perspective, I think one of the things I've been working on is, more. I'm generally a very good communicator, but the key thing about communication is there are 3 things around communication. There's the logic of it, there's your personality, how it goes through, that is seen, and then there's also the emotions of people. So I actually I just did a course in Wharton Business School, which is it's about effective effective communication generally. So I think that's one of the things I've been wanting to do. To improve on, and so far I was able to get a lot of benefits in terms of understanding how to manage or blend those 3 parts. Because as a general thing, my general methodology is logic. I'm a logical person. A plus B plus C equals to B. But most people, are less logical, are more feeling. They are more around how something makes them feel. So I'm learning to tap more into that.
All right, that's good. All right, what is your favorite business book?
I would say one of the books that actually, from a relatively young age, impacted me the most is probably Rich Dad Poor Dad. So I would say I think that just that one alone is sort of etched in my brain. I've read so many other business books, but that one, never left my mind, so to speak.
Awesome. That's one book I like a lot too. All right. What would you do differently looking back at your real estate journey so far? If you were to start again now,
yes,
what would you do differently?
I think yes, like for the first deal that the real estate journey, be very rigorous when it comes to inspection. There's a guy who I know is one of the most honest inspectors in this whole Washington state, and sellers don't like him, but the guy is a good guy. So find ways. What I would have done differently would be find ways to hang on for the guy who's going to give you the most information when it comes to the damages or the fixes you need to do to that property that you're buying. So sometimes find ways to just hang on. If they are not available on Saturday or a particular day, find a way to get at least one, or balance it out by getting somebody with similar capabilities. I just decided to get somebody I felt had a good track record,
Okay, good. What are your hobbies? I think that's my last question. What are your hobbies?
Yeah, I love running. So I run almost every day. So but typically minimum 4, but mostly 5 times a week. I love running. It's where I just, my creative juices work. And then I also love reading. But I don't sit down every day these days to read a lot. It's more about listening to stuff. So I listen to a lot of podcasts. I listen to a lot of books. I don't know how many I've read, but I think probably I did over 30 books last year, trending for close to 15 or thereabout this year. So I love reading. The last book I just read is it's called Data Detective by Tom Harford. And then some recommendations from you, Shoe Dog. I've listened to.
How do you like it?
Yeah, it's fantastic book.
I love
fantastic
that book.
by the guy who built Nike,
Yep.
So and then I've listened to some other books like Your Next 5 Moves by Patrick David and all that. So I love reading and I love running. If I can do those 2 every time, I don't have too many problems.
Let me give you another recommendation. I was trying to check out my book, The Ride of a Lifetime by Robert Iger, the last CEO of Disney. Man, that was another lovely business book I read this year.
All right.
That is I mean, that book is like very close to Shoe Dog for me. Those two books are very good business books.
What's the author's name? Robert what?
Robert Iger, the guy, the past CEO of Disney.
How's it spelled?
Iger is, I think, Iger, but just
okay,
yeah, just Google his name.
Okay, Bob Iger,
the ride of a lifetime. It was very guy. I already tell you this year. All right, finally, how can people connect with you? I know I've put it up there, but we would like to hear from you before we go. How can we connect with you, Kess?
Yeah, so I mean, you can always easily email me there. Easy, and also just send me text or call me on 804-424-2528. And then you can reach me on LinkedIn for those who like LinkedIn. Just put a note. We were together in the webinar and all that. Just put a note on LinkedIn. We can connect. Facebook is also the option, but I think I'll say it's option number 4. But Dio, sorry about that.
It's okay. At least they are still getting we are still getting paid. All right. Thank you so much, everybody, for hanging in with us. Thanks for coming around. Thanks for the questions. Thanks for the learning. Thanks for providing new perspective for even myself and Kess. It's been wonderful. The webinar recordings are available very soon. It will be uploaded to our website and also to YouTube channel. Please subscribe, share, and also like, so that we can get to grow our base and on the YouTube channel, and it will help people to see us more. And if you would like to join us next time, please drop your email so that we can add you to our our email chat, and we'll be able to send you next email when we have a new webinar coming. Thank you so much. It's been so wonderful having you around. You can connect with us. We are on Instagram, LinkedIn, Facebook, Twitter, and also on YouTube. And with that, I want to say thank you, Kess. It's really wonderful having you. It's been an hour, 30 minutes of chatting and questioning. So thank you so much, everybody. Have a wonderful weekend. God bless.
Thank you very much, everyone. Have a good one.
Bye.
Thank you.
Sure.